How's it going, everyone? It's Sam. I am doing the next installment of our weekly dividend series. I'm going to tell you what I bought this week and talk to you about how important dividend investing can be over time, how much you can actually make from this, and how much your dividends can grow. So if you guys like this, please leave a thumbs up. I really appreciate it. If you guys want to see more of this, hit the subscribe button. And if you want to follow us along the journey, we're about 24 weeks in. We're coming up on 6 months investing in this portfolio. So if you want to follow us along, if you want to invest $100 a week, you can check out the link down below to M1 Finance. Now you can do it your own way if you want to invest, $100 a month, if you want to invest $1,000 a month, $10,000 a month, whatever you want. But I really like this because it is a way to be able to see what your future income will be able to project it out. It's a safer way of investing than a lot of the growth stock investing that I've been doing on the channel. And I like to do both, but this is an interesting way to kind of diversify into these blue chip companies, these companies that are paying really nice dividends. It is really appealing just to see those dividends grow and grow and grow, and then come in and then you can reinvest. So if you want to join us at the age that I am right now, by the time that I'm 60, this account should grow to around $1 million based on normal market returns. So I should be expecting between $30,000 and $40,000 a year in dividends, which will be really significant. That's only investing $100 a week. So again, if you want to follow us along the journey, invest whatever amount you can into whatever stocks you think are doing well, but I'll show you every week that I'm buying. And if you want 4 free stocks through WeBull, maybe you don't want to try M1 Finance, but maybe you want to try WeBull, there's a link down below. Just deposit $100 and you should get 4 free stocks. I believe they're still running this. I'm shooting this a little bit earlier in the week, but they should still be running this by the time that you see this. So definitely check out that link. And if you want to know exactly what I'm buying and selling in real time, you can check out the link down below to Patreon. So the dividend and investment growth portfolio is doing really well. We're up almost $400. We have a return, and actually they use a money weighted return of about 35%. Overall, though, we're up about $400, so still a pretty sizable return overall. You can see all our positions here. We have Store Capital as our largest holding here, up about 25%, and this is all time. Then we have JP Morgan up about 34%, Disney up 27%, Foot Locker up 40%. Realty Income up a little bit, and then you can see down the line we have some nice returns on some of these other stocks too. Now this week we bought just 2 stocks. We sold the last little bit of our SPHD. I don't know why I didn't sell that before when we sold it. But we have JP Morgan Chase and Store Capital. So I talked about this in last week's video. I think JP Morgan Chase could easily double over the next 5 years. I think they are being very conservative right now with their dividends because of the pandemic, and I think they'll continue to increase these. It's pretty much backed by the U.S. government. It's one of the largest banks in the world, if not the largest bank in the world. And then we have Store Capital, another REIT that I just think does really well. They are a company that I really like, and I have them in a couple portfolios actually, but I feel very strongly that they're going to continue to outperform other REITs and be able to provide a lot of cash flow to investors. I'm not going to go as much into depth on these companies because I've talked about them in the past, but I do want to hit on something that I think is really important. So if you grow this, let's say you do $400 a month over the next 30 years, that will grow to be $1.2 million. Now, that's great to see, but maybe you want a more specific case. So let's take a look at Realty Income, one of the stocks that I hold in this portfolio, and take a look at the company. So in 2000, they were right around $10 a share, $10.50 a share. They were not a very expensive stock. Now they're $60 a share. But their dividends at that time were still about $1.09 a share. Now, that might not sound like much compared to what it is now, which is about $2.70. But when you consider the fact that at the time it was a $10 stock, that is really significant. It was about a 10% yielding stock. Let's say you bought $100,000 worth of shares at the time, and maybe this is like a couple years before and you kept on buying. This is just for demonstration purposes. Maybe you even did a whole portfolio that was similar to this or whatever you want to do. But let's say you had bought $100,000 worth around that time. At the time, that would have yielded you about $10,000 a year in dividend income, which is awesome. But think about it now. So now you would have a much more significant amount of dividends. You'd be getting about $27,000 a year in dividends just about 20 years later, and your share price would go from $100,000 up to $600,000. And the really interesting part about this is that isn't even accounting for you reinvesting in the company, right? So you would have gotten all these dividends all along the way. I mean, you're talking about dividends of, again, 11,000, 11,000, 11,000, 12,000, 12,000, 13,000, and so on. You're collecting a lot of dividends along the way. Let's say it's just 20 years at, again, $20,000 worth of dividends. That is a significant amount of dividends. If you had reinvested that, you would have been able to buy more and more shares along the way, and that would skyrocket. I mean, that probably it throws off everything that I've said and makes everything else sound really insignificant, because we've had so much growth. I mean, over the last 10 years, just the annual growth rate for the dividend is about 4.7% or so, and the stock has 6x'd over the last 20 years. So if I had to estimate, it's probably something like a 15% rate of return between the dividends and the growth rate over the last 20 years. I don't think that's a crazy number by any means. And that would essentially bring you from $100,000 up to $1.6 million, and you'd be getting a ton of dividends. Again, the first case scenario is $27,000 if you took every one of these dividends and just spent it or did something else with it. And that's the power of compound interest. That's the power of dividend increases. We've seen Realty Income really increase their dividends for a long time. And if I really wanted to play with the numbers, I could have gone with 1996 when they were paying just 85 cents a share. So this company is one that's grown dividends over time. That's why we're picking individual stocks that we think will do well. Stored Capital is really early on in their growth phase. I think that they're going to do really well. And if we can capitalize on this, if we can invest in companies like this, it's going to pay off huge amounts of dividends over time, so to speak, and literally. I think we're going to do really well with companies like this. And over time, they're going to raise their dividends. They're going to be able to produce better and better results. They're going to become leaner. They're going to grow. So I think investing in these 8 to 10 companies that we've picked, and whatever you're picking, I think that's going to be really good over time. And these companies, I picked pretty large companies. I think Stored Capital and Realty Income are two of the smaller companies on this list. But I wanted to pick companies that didn't just have a huge yield or anything like that. I'm not picking 15% yielding companies, just for the fact that I am trying to invest in companies that I think have good growth but are also pretty safe. So this is not an account that I want to look back and forth every day on. This is a company that I want to buy and then forget about it for 15 years. So I've sold one company so far, but it's not that they were doing poorly or that I thought they were really risky. It's just that it was a mutual fund, and I really want to invest more into some of these other companies. So let me know your thoughts on this down below. I really appreciate it. If you guys want to buy some of these stocks along with me, if you want to start investing, check out the link down below to M1 Finance or WeBull if you want those free stocks. But I really like M1 Finance for long-term investing. Definitely check out these companies that I bought today if you haven't done that already. I think they are going to do well over the next 5, 10, 15 years. And again, thank you for hitting the like button and the subscribe button. And I will see you in the next video. If you want to see some other stocks that I bought this week, check out this video here. Thanks.